Hey everybody, welcome back to Layman Loans. In this video, we're going to see what is a working capital. Working capital is applicable only for businesses and self-employed people, not for salary class employees. So typically, you're running a business, you need sufficient funds to run the business on day-to-day basis. What are the different expenses what you get in a business? You have fixed expenses called capital expenses, and you have operational expenses, which are like variable expenses. So let us see what is a fixed expense, what is a operational expense. Your rent becomes a fixed expense. So you hire an office space or a factory space, that rent becomes a fixed expense. You have a set of employees, that becomes your fixed expense. You have a set of machineries which will be used on a regular note. You're paying EMIs for those machineries, for the loans what you've taken, that becomes a fixed expense. But there are a lot of operational expenses. Say based on the current usage what you use, the electricity bill will vary. Based on the resources what you get on temporary or permanent basis, that expense will vary. And there are several other operational and variable expenses which keep happening time to time. So for all these things, you need something called as a working capital, right? On day-to-day basis, in small shops, they call it as like petty cash, what they have for like daily operations. But in a big organization which has hundreds of employees and a lot of transaction, this is an enlarged form of petty cash, which is called as a working capital. So if a company doesn't have enough working capital, then it will not be able to meet out all the expenses, and it will become very sluggish, or it might literally stop working. All right. So banks many times are willing to give a working capital loan for businesses and industries, provided they have a defined period of return. Say, for example, you are running a small manufacturing unit, and your payment from the client will be coming only once in 6 months. But you have to be running the unit every day, but your payment comes only after 6 months. For 6 months, all the expenses what you are going to be the same. Your fixed expenses you very well know. Variable expenses, you know the ballpark figure of what is going to be your variable expenses. But currently you do not have enough money to make the production. So for 6 months, if you do not make any production, after 6 months you cannot raise any invoice from the client and you cannot make the payment. So typically, you need the funds to run for those 6 months. Only then you can raise invoice and get payment from the client. So if you go to a banker with a valid contract and order and say that this has been your previous track record of work, and you have last 3 years IT return and bank statement, then the banker will be more than willing to give you a loan called as a working capital loan, wherein they understand your business and they'll try to lend you enough funds to meet all your fixed and variable expenses. So many times, if you see many of the new age companies like Swiggy, Zomato, all these startups raise a lot of capital, right? They raise millions and millions of dollars. Few startups may raise even billions of dollars. The money what they generate predominantly is being used for marketing and working capital. So they generate enough money for a minimum of 18 months or 24 months run rate. Only then they'll be able to hire new staff. So if you don't have enough capital, you hiring a lot of people becomes a huge threat if you're not able to meet their salary. Assume your client payments get delayed, then how will you be able to meet their salaries? If your other source of income or your loans get delayed, then you will not be able to meet up several payments, your EB payments, your rental payments. All these will become sluggish if your payments from the clients become delayed or it is postponed. So for this very reason, you can very well go and approach the bank for a working capital loan. So for you to know what is your actual working capital, you need to go to an auditor and sit and make a balance sheet wherein you know your total expenses and your income, what you're generating on a monthly basis, and cumulatively in a month, what is the total expense and income what you're getting. And based on these figures, you'll know what is your actual working capital required on a monthly basis in order to fulfill a order what you get. After you get this detail, and if your business is at least 3 years old, you can very well go and apply for a working capital loan or business loan from the bank. If you need assistance in getting a business loan, you can always feel free to reach out to us. And if you are a small business owner who has never filed an IT return, or you have never generated a balance sheet in your life, then we do have a separate CA team who can help you on that aspect. You can reach out to us by filling up the form mentioned in the description and the comments below, and we are there to always help you. I hope you like this video. Looking forward to connect with you all in the next video.